Good evening. My name is Holawale Olamide Akindele. Today, I'm here to present a topic analyzing the role of international financial institutions in shaping global economic relations and political dynamics in the context of financial crisis. Over the years, we all know a lot of financial crises have been experienced over the years, from the 1997 Asian financial crisis, the 2008 global economic meltdown or financial crisis, to COVID-19 pandemic. All these, we want to look at what major role the international financial institution like World Bank and IMF has played so far. And in light of this, we'll be able to look at what brought about this international financial institution at first instance. First of all, was as a result of the post-war era known as the Bretton Woods Conference. It was during this conference, the Bretton Woods Conference, that was when the decision or the idea came about on how to establish international financial institutions. That was after the post-war era. After the post-war, the whole of European Union were devastated. There were a lot of destructions, industries were out, productions were out, and employment was high. So as a result of this, the IMF and the World Bank were established to be able to promote reconstruction and redevelopment in the European Union, after which this spread across the globe to other parts of the world. Now we have regional developmental banks like African Development Banks as part of International Financial Institution, European Development Bank as part of International Financial Institution, Asian Development Bank as part of International Financial Institution. But the purpose of this course will only focus on the IMF and the World Bank. And we look at their primary objective. First of all, number one is to promote economic and social development across the world, is to reduce poverty and inequality on a global scale, is to foster international cooperation through loans, policy advice, policy counsel, and capacity building. It's also to mitigate against crisis, example for financial crisis. It's also to provide financial stability to global economics all around the world. To also look at this, there are a lot of characteristics that is embedded in the international financial institution. One of such is the multilateral characteristics. Multilateral means that the International Monetary Fund and the World Bank, which are both international financial institutions, are not owned by a country. They are owned by multiple countries. As a matter of fact, the country ownership or established as of today is 196 membership of IMF and 196 membership of World Bank. And also part of the characteristic is that they are subjected to international law. They are governed by international laws and protocols. The shareholders are national governments of nations. No individuals can hold assets or shares in this international financial institution, particularly the World Bank and the IMF. The shares are owned by national governments of nations. National governments of nations. As a matter of fact, the United States holds the largest shares in the IMF with over 16% equity share in IMF. They also focus on development with target to reduce poverty. They also mitigate against crisis response and provide financial assistance to countries facing global financial crisis. For example, as I made mention earlier, the 1997 Asian crisis was a part where the IMF and the World Bank were able to interfere to be able to bring about stability through financial machineries and mechanisms, to be able to bring about policy initiative, to be able to bring about a desirable effect on the global economic landscape. Also, this was also experienced in 2008 during the global financial crisis, where the IMF and the World Bank came about to be able to bring about a cushion effect through loan restructuring, through debt servicing, through debt distress, providing equitable funds to countries to be able to mitigate against the negative effect of this financial crisis. Also, we can see that they've played a significant role in debt distress. for low-income countries. They've also played an important role to be a negotiator, to be a referee, to be able to be a third party to negotiation between the trade war between the United States and China, which is of recent. This intervention have shaped economic relations by influencing capital inflows, trade policy, and debt restructuring, while also imparting political dynamics through conditionality and geopolitical alignment. Also, part of the framework we're going to look at when considering the international financial institution is that they both serve as a technocratic stabilizer and geopolitical actors, especially in a time of crisis when financial and political stakes are high. Look at the liberal institutionalism, meaning that IMF and World Bank foster cooperation among states to achieve mutual economic benefits by promoting economic stability through multilateral framework. Geoeconomic perspective is another framework we look at. It serves as a powerful tool to states to advance their geopolitical agenda or objectives using economic leverage to influence weaker nations. When I mean weaker nations, these are less developed nations, middle-income nations, low-income nations, where the Western world have been able to influence them through their decisions and their policy by leveraging on their geopolitical powers or tools to be able to influence this economy. In time of crisis, we've seen that the international financial institutions have provided liquidity as well as stability. As a global leader of last resort, they provide liquidity to countries facing financial distress. For example, during the 2008 global financial crisis, IMF disbursed over 200 billion in capital funds to stabilize the economic all around the world. Majority of these funds went to Latin Americas and Asia and Africa because these are the countries found in the category of low-income countries where these funds were perfectly distributed. However, the World Bank International Monetary Fund also, during this period, expanded its lending rate by over 50% to support middle-income countries like Malaysia, Mexico, Turkey, and Indonesia. Over the years, this role have expanded to include over 118 billion in emergency financing to 87 countries by IMF in 2021 alone, after the COVID-19 pandemic, while the World Bank as well committed over 157 billion for health and economic recovery during the same period. They have also assisted in numerous ways through debt restructuring, debt refinancing, and through debt management. They play a critical role in managing sovereignty debt crisis in low-income countries. These have also helped in many ways. They've also helped in policy advisory body, particularly the strong policy of the IMF is known to be the Structural Adjustment Program. Structural Adjustment Program, which is the short form is the acronym is SAP, was also used during the period of economic meltdown of 2008, where Greece and Ireland were included to be able to foster fiscal austerity measures and banking reform, where these policies were adopted to be able to bring about a reform in the financial situation, because these European countries were the most affected, the most impacted negatively by the global economic meltdown. So as the result of this, the IMF was able to provide enormous loan and through their policy, structural adjustment program, to be able to stabilize the economy. They've also helped to stabilize the global economic relationship, to be able to shape the relationship of the world. They've restored investor confidence all across the world. In Eastern Europe, in particular, attracted over 100 billion of private investment in 2012 after the 2008 economic crisis. Over 100 billion was attracted into the economy through private investment. This was done as a result of the policy advisory body, which this international financial institution sometimes play to be able to bring about desirable effects on global economy. They also promote trade and integration. They back reforms such as tariff reduction. They back reforms such as trade openness. They back reforms such as enhancing supply chain in the global market. They've bridged the gap for over one. They've also helped in financing over 4.2 trillion financing for climate change, which align with the Paris Agreement goal of 2023. The Green Climate Fund have helped nations all across the world to be able to cushion the effects of the global financial crisis created by the climate change, As we can see that this over the years, the role of international financial institutions have been enormous to be able to provide financing, providing advisory body, providing servicing, debt management, and restructuring. These and many more have been the major role international financial institutions like IMF and World Bank has played. They've also helped to shape political dynamics, having profound political implications. As we all know, the Western nations dominate the IMF and the World Bank, which makes them to have the highest voting strength. And over the years, they've used this influence to make lending decisions. Particularly, Ukraine was able to get 15 billion of IMF funding program in 2023 as a result of the backing of the United States, who happens to be the highest shareholders of this bank of over 16% equity assets. These have helped this institution to be able to direct their lending decision towards countries or nations favored by the Western ally or by the Western shareholders. Also, one of the roles they've also played is financial sanction. They've also used this to sanction countries like Russia, Iran, Syria, over the years, even North Korea. In this instance, they'll be able to sanction them through the global financial channel, where this IMF and World Bank have been so important to be able to shape global financial corridors and power. And also, we can look at domestic political backlash. They've been able to do a lot of reforms in countries all around the world. They've been able to bring about reforms, increase in emerging markets across the globe. They play a significant role to bring about debt servicing. They play a significant role about reducing poverty. They play a significant role about bringing about infrastructure development and sustainable development across the world. We can look at some case studies where these international financial institutions have played. In particular, 2008 global financial crisis, the IMF rapid response, which included over 50 billion to Hungary and Ukraine, prevented a contagion but imposed harsh austerity measures to delay the recovery. IMF, also, the World Bank provided over 45 billion of loans to support infrastructure in middle-income countries like Brazil, Venezuela, and Indonesia. And also, between 2025, between year 2020, and 2025, the IMF and the World Bank have been able to provide financial debt measures to less developed countries or low-income countries during this period. Particularly, one of the recipients of this debt relief is Zambia. Also, they've also helped in instances of natural disaster. Haiti is an example. During the Haiti volcano eruption and earthquake, the World Bank was able to grant enormous grants and loan to Haiti to be able to bring about reconstructions and redevelopment into the economy. However, these and many more roles these international financial institutions have played or have been playing over the years, and they are still playing. However, it's indispensable they are indispensable in managing financial crisis globally and locally, and also even stabilizing the economy or shaping global economic relations or policy through liquidity provision, debt restructuring, and policy reform. However, their political influence are driven solely by the Western dominance. This is one of the limitations or one of the challenges against their legitimacy over major economic issues. Also, in conclusion, to remain effective in achieving their objectives and goals, the international financial institutions like IMF and World Bank must reform their governance structure to enhance inclusion and to align with the sustainable development agenda, 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 and to a for year 2030, where